All right, everybody, welcome to our This Week in Crypto call. We are in Turkey. For those who didn't know, our team has taken a trip to the Eurasia area of the world here, and we are excited to be able to stream from our hotel here. It's a beautiful trip. We'll probably try to post a few pictures on our Facebook for those who follow us there. And in the meantime, we know why you're all here, and that's to talk markets. And it's been a huge week for those who have been following along. The Ethereum merge was officially implemented successfully yesterday. There is a lot of handshakes and celebrating to go around. That proof of stake is now live. And with that, we saw that prices initially went up. We were in the mid 1550s right before it uh, over the next 24 to 30 hours here, it's actually dropped back down and is now sitting at about 1430, according to the exchange data that I'm looking at. And with that said, prices are not looking great because Bitcoin has not been much better. Bitcoin is down 6% over the past 7 days, Ethereum down a whopping 15%. And outside of a few very tiny outliers like Chili's, and these are essentially stable coins, so just Chili's really, pretty much all the top 100 assets are down over the past week, which is not what anyone, well, a few people want to see that, but most people don't. You can see very clearly here too, social volume all over the place is down, except for Ethereum. And not surprisingly, DAI as well, which is a Ethereum-based stable coin. And many Ethereum-based assets, you can see Uniswap here, for example. But overall, the trend appears to be less and less people talking about crypto right now. And it appears that fatigue is really starting to set in for a lot of traders who've watched this bear market basically run from arguably late November all the way until now. So we're going on 10 months or so. And this is kind of a double-edged sword. We want to see the crowd, not very interested in the markets. That tends to be when bounces happen, especially when they're assuming that prices will continue to plummet. As we've talked about many times, that's generally a good thing for the markets. But at the same time, we need utility to justify price rises. So if whales begin to pump prices again, if the crowd ignores that and doesn't start to circulate coins themselves and send from address to address, creating increased utility, then it's pretty hard for Ethereum or Bitcoin or any other coins to get back to their former all-time highs here. So there are a lot of things that need to change, and it really begins with seeing some actual encouraging signs. Now, obviously, the leading topic here is Ethereum, and before I get into it, just mind the fact that we are not an investment advice platform. Our goal is to simply give you the news and the data and let you make your own assessments about that. We simply point out the divergences, tell you what has happened previously based on similar divergences in the past, and you can take that information however you choose. Now, yesterday we made a post that went particularly viral on Twitter. There were quite a few opinions that occurred from it. And what we did was announce the fact that the Ethereum post-merge inflation dashboard that we have proved that 46.1% or so of the proof of stake nodes for storing data, processing transactions, and adding new blockchain blocks can be attributed to just 2 addresses. And this heavy dominance can be a bit of a worry. Obviously, people took this as a sign that the new proof of stake version of Ethereum is heavily centralized. But in reality, that's not necessarily the case. Anytime a new asset has a new technology or type of methodology, there are going to be initial front runners that really take the torch and run with it fast. But over time, we can expect that this number will go down. And give me just a moment. I'm going to pull up how it looks now because it's already changed plenty over just the past 24 hours or so since we posted this. See if I can find it. Yeah, I'm not seeing it right now. We'll have to do some research and find that dashboard. I really wanted to give an update on exactly how it's looking, but for now, we'll just plan on giving you an update on Twitter following the stream. But things are changing in a hurry, and really the reason why this is relevant is people tend to be very reactionary to early data, and we made the announcement that 2 of these addresses were dominating the overall proof of stake nodes, and dependent on people's current positions in Ethereum or assets that rely on Ethereum, it really creates a bit of a bias in them because they're rooting for prices to go up. Therefore, we don't want a narrative to come out that things are centralized. And that isn't necessarily what we're saying here. What we're saying is that there was a very big boom from 2 addresses to begin it. And that's really where we can leave it for now. But it is going to be an important thing to watch. And we are going to give plenty of updates on how things are changing over time. I already saw that it was more like 41% when I checked something around 12 hours ago. So I wouldn't be surprised if the top 2 addresses now are closer to 35 to 38%, something like that. But we'll get you accurate numbers shortly. In the meantime, another interesting story is the fact that ETH is getting quite a bit of attention at the moment. You can see here the social volume is really blasting off since the merge. That's expected. The proof of work version of Ethereum, or the old archived version, was being talked about as being retained since basically a week before the merge. That's when I started to see a lot of talks popping up about it. And we don't yet have ETHW data yet, but we do have, the coin market cap price chart right here, and we can clearly see that the merge has not been kind. It dropped something around 60%, I think even a little bit more, because the initial price action leading up to the merge had it pumping pretty considerably as people were trying to get their hands on Ethereum proof of work in case the new proof of stake version failed. Then this would be very valuable as it's the only one that's still working. But of course, the merge went completely smooth, and the people who hedged their bets by getting a lot of ETHW really just paid the price and watched their value of these coins plummet pretty considerably. As you can see, people are now calling it a scam. People trying to figure out how they can do minor swaps, things of that nature. But for the most part, it is a polarizing topic right now because people aren't quite sure what to make of it. And we're going to continue to keep an eye on it. You can see that it really has exploded on all 3 platforms here: Telegram, Reddit, and Twitter. But that being said, let's talk about the main portion of what this stream will be about. And that's exactly how Ethereum is looking right now. As I mentioned, it was in the mid 1550s, got to the low 1600s after the merge before dropping down pretty considerably. And it didn't just drop with the rest of the markets. It actually gave up quite a bit of the lead that it had been developing against Bitcoin. And Ethereum has kind of been one of the worst performers of at least the top 100 assets over the past 24 hours. So that clearly is showing that traders are drawing a line in the sand and a little bit down on Ethereum, whether they think it's due to the increased centralization that some are suspecting, or they're just not as trusting based on all of the polarization and they'd rather get on the sidelines and wait for things to play out and stabilize. It's causing a little bit of a sell-off right now. And our goal here today is to figure out whether that will last or not. And that means looking at some really short-term data to see how anything may have changed just in the past week or so. But let's go through some of the usual metrics here. And as always, guys, please feel free to give your comments, ask questions, anything you'd like, so we can try to help and answer questions the way we best can. All right, so circulation. We made an update yesterday about how circulation was actually looking quite good in very recent times. If we go to just the last, let's go to the last 3 months here, we can see there has been a little bit of an uptick leading up to the merge. That's expected. And if we go to NVT, the circulation versus market cap, we can see that as of September, we've now gone back into a bullish divergence despite the past 2 months being bearish. So this is quite a jump to extremes, nothing in the neutral territory, just straight from bearishness from February to April, then to bullishness in May and June, back to bearishness in July and August, and then back to September bullishness. And this chart actually is pretty predictive for September, I know, or for Ethereum overall. I know that we saw some strange volatility when things were actually looking better in May and June, but that was mostly due to CPI reports coming in with very negative inflation reports and recession scares, and that pretty much trumped any positive sign that Ethereum had, because with crypto so closely tied to equity still, there's going to be quite a bit of correlation that is going to be unpreventable no matter how strong or weak an asset looks. Regardless, due to the big plummets, circulation started to dry up. There was a lot of stagnation and freezing up from traders not wanting to make too many big moves, which is typical during this time. And now, with the anticipation for the merge over the first 2 weeks of September, we saw a pretty nice increase in circulation. And now the question is, will it continue? Will we suddenly see a big plummet in circulation, or will things actually begin to rise? And we're going to, of course, have to wait a little bit to find that answer. But skipping down really quick, we can look at funding rates. So if I make a, let's just put it down here for now. We'll do FTX, put it on this one. And look at this huge, huge spike right here. So let me do this so we have the zero line. Okay, so this line here represents essentially even funding rate, an equal amount between the amount of longs and the amount of shorts. When you see this line go above the line, that means there's an excessive amount of longs and there's an increased chance of some long liquidations happening, and they very often correlate with tops. Vice versa, when you see things in the negative territory, there's more likely to be a rise. And for the most part, things have been slightly short for Ethereum over the past 3 months, and not surprisingly, Ethereum's been on quite a run. And that's, of course, due to a variety of reasons, but in general, when you see a sustained amount of shorting, prices generally rise. Those shorts getting liquidated act as rocket fuel for prices to continue to propel upward. But nothing compared to what we saw here, and this was before the merge. This occurred after the CPI report came out and made a statement indicating that inflation was worse than we thought here in the United States. I'm actually not in the United States for once, but regardless, the United States Fed is basically going to likely continue to hike interest rates to combat the very high inflation that's still going on. And that is irrelevant to how markets are doing. Some people think that they fluctuate, rates just to pump the markets or dump the markets. They're really just trying to combat inflation or combat stagflation. And that's why most of their interest rate adjustments are happening. So in this case, for Ethereum, this all happened just 2 days, maybe a day and a half before the big merge was happening. And for a variety of reasons, traders just decided we are going to short the markets here and take advantage of this negative CPI news combined with an uncertain merge that we think is going to push markets down. And interestingly, they were sort of right. It's interesting because a lot of them closed right before this big drop here. But this time, I should say, right around here, this is when the merge happened and we had an initial rise. The shorts kind of stopped, and it's still short, but not nearly to this extreme, which, by the way, was the lowest since March 2020, Black Thursday, back when COVID was first hitting the mainstream consciousness. But regardless, once we got back up here, prices really started to drop, and it's quite volatile now. I would expect that that's going to continue probably for at least a couple of weeks here, because this is a very, very big development for Ethereum and a big change to the #2 market cap ranked asset in crypto. But I think it's a very important thing to keep an eye on, because funding rates have been just slightly short, but nothing compared to what was happening with Ethereum. And most exchanges are pretty similar to FTX. Some didn't see nearly this amount of short ratio going on, but it was still low at that time, more so than most coins. So the crowd perception, as you would imagine, is very negative toward Ethereum at the moment. And you can see that Bitcoin and Ethereum, they're mostly pretty flat, but still in the negative range. And you can notice that on the Sanchit's model, that's indicated by green. Green means that it is a good thing, more often than not, for bulls, because when the crowd is putting their money on the markets going down, historically, there's a much better than average chance of prices going up instead. All right, so back to some of our main metrics. While I'm here, I will just replace this with the initial metric that was here. We're just going to say mean dollar vested age. 365 is fine. So what this is showing is the amount of the average age in which the dollar investments have sat in Ethereum wallets. And the longer they've been in there on average, the higher this line gets. And if we zoom out a little bit, we'll do like the last, let's do since 2016. So generally speaking, when we see this line rising, it's indicative of coins becoming very stagnant, investments kind of just hodling, not circulating coins, not moving them out of dormant wallets where they've been sitting for a long period of time. And it keeps climbing and climbing until we finally see a reason for these older dormant wallets to start moving. Usually it's a small handful of them that decide to start moving their coins. Other people start to join in once they see that the price is rising along with that dormant coin movement. And before you know it, we see a snowball effect of many dormant wallets moving their coins in order to ride up this bull market. And it causes the bull market. It's kind of a self-fulfilling prophecy. So in short, right now, as we saw that things had started to get dormant, really, I guess right around here, this was about a week after its all-time high of a little over 4,800. And it's been climbing and climbing, but let's zoom in a little bit. And we have seen that there's been a little bit of dormant movement going on right at the merge time. It was actually just ahead of it. So people were anticipating that the merge could have some major price volatility, and they wanted to prepare for that, whatever they ended up doing. And it caused this big drop in mean dollar invested age. And this is actually the largest since mid-July. And this ended up being kind of a false alarm, because the mean our invested income kept going up. But overall, we have these blips now, and if this one starts to taper off and potentially start to go down, that's the sign we're waiting for. Those are generally the of a bull rally beginning. Sometimes it's just a very short-term thing, but if you see like a week of sustained flatness or especially downward slopes, it's a better than average time to begin accumulating and loading up for some growing prices. So I definitely recommend, if you have your Sandbase Pro account active, or you're just opening a trial, watch how things look now that proof of stake has been implemented, and see if it starts to cause a lot of dormant Ethereum to be moved, as prices will be very volatile one way or another. Let's head back up to the top here. So we talked circulation. By the way, look at this spike here. If we go back to the last year, this is the largest circulation spike over the past year. And we can go back a little further. And the last time we saw one this high was in May of 2021. It was right about the same height. And this was kind of, it's hard to see here if I zoom into May. There we go. So this was the big spike right here. We see that this was sort of the semi-bottom. Yes, it got a little bit lower, but when you see this huge circulation spike, which especially if it coincides with a huge rise or a huge fall, it can be a sign that things are getting close to the end of that trend, because a large amount of coins are capitulating and deciding enough is enough, or they're taking profit if it's going up, buying if it's going down. Most people get it wrong though, so you're mostly seeing on these big spikes probably people capitulating and dropping out. And this recent spike is, of course, a rare event because it's people deciding whether to load up or dump off just prior to the merge. And if they dumped off, they ended up being right temporarily. Now, another thing to look at is daily active address is very high, and that's expected, obviously. If circulation is high, there were definitely a lot of addresses that were contributing to the amount of unique tokens that were being moved. But you can see it wasn't the biggest spike in the world. We saw a bigger spike here on August 4th, for example. We saw the biggest spike of the last year back on July 25th. So this wasn't out of the ordinary or anything, quite the way circulation was. Now, moving on to MVRV, always an important metric, one of our most important metrics to look at for swing traders or long-term traders. And we have both the 30-day MVRV up as well as the 365-day. I'll move this line up here to the negative 15% spot, which is essentially our opportunity zone. And then plus 15% is the danger zone where prices tend to correct. And we're going to just focus on the red line for a moment. Ignore this bottom line. Sometimes it just creates an infinite amount and I can't get rid of them. But essentially this top line here, you can see as MVRV was going over it between pretty much July 16th to August 15th, this was essentially the danger zone. And typically if you're getting out when it crosses this line, you're historically making a profitable move. Yes, from July 16th to August 15th, the price did continue to climb a little bit, but eventually it broke down and you could see the MVRV not only going back down to zero, but actually going below and eventually going into the opportunity zone here about 2.5 weeks ago. And Maxim likely covered this while I was gone, but right here is where prices bounced up again, up until we got about halfway to the danger zone. And obviously this is right before the merge happened, and prices have been dropping since then. You can see a similar situation here. Similar, it's not so similar here because prices did continue to climb, but you can tell on the extremes, that is where you want to be very careful. Now, if we switch it over and go to the long-term MVRV, the 365-day, we are still in a very, very negative spot. And this is a good thing if you're a bull. As long as things are this negative, the average trader is down about negative 38% on average. That means there's some meat on the bone for a rise to get back to 0% where this metric normally fluctuates. It's been below 0% all the way since April here. So we're going on just about 5 months, a little over 5 months, with a negative 365-day MVRV. Other than a few blips in the radar, actually, we could go all the way back to mid-January, so about an 8-month stretch. So overall, our long-term outlook is still looking very good, and our short-term outlook is looking good because we are in the negative territory right now. It doesn't mean that we're going to have a huge breakout by any means, but if you are adding onto your position or opening an Ethereum position, you are objectively doing it at a less risky time in context to how other average traders are doing than normal. And I hope that makes sense. We are more than happy to help out, give some extra information about how MVRV works. Don't forget that you can always go to our Santiment Academy, and you can just type in Santiment Academy MVRV, and it'll pop right up here, and you'll get a full explanation of exactly how it works, an overview. I recorded a video on it, I think earlier this year. It gives a pretty nice explanation, and you can even just look up any metric as well by just going Santiment Academy metrics, click on metrics overview, and you've got a lot of articles you can read through. So I just wanted to mention that really quick. Other news, for those who haven't seen yet, we have a new, actually I can do it from here. Thought we could do it from here. There it is, insights. So we have a new mid-month September report, and obviously the Ethereum merge was the big talking point for obvious reasons. We gave kind of a long-term price summary of some of the top cap assets. We can see that they've all kind of been dropping as of late. One of our staff members here pointed out this funny meme, which we thought was very, very applicable, because at the time, you know, everyone had an opinion. Is Ethereum going to go to the moon right after, or is it going to fall off a cliff? Well, the reality is neither happened. Yes, prices are down roughly 5% or so since the merge, but that's really not anything significant. And the reality is there really wasn't any huge news. It was a successful merge, and life went on. And obviously, Ethereum is struggling more than most assets right now, but we have not seen a huge dump or a huge pump as many people had opinions on one way or another. We already mentioned the combined percentage of addresses holding the proof of stake nodes, and we will give an update shortly after this call. We've also talked about this. So this was, of course, a couple days ago, but we had a big drop in the S&P, so much so that it was the largest drop in 2 years in a single day. Right, I think something like 4.5 to 5%, somewhere in that range, which is massive. It's nothing like a crypto drop when that happens. 4.5% in equities is massive. And with that, Bitcoin ended up retracing about 10% itself. Ethereum around the same time. This was, of course, before the merge. But more than anything, what it indicated is we still are very, very much correlated, crypto and equities, to one another. And until that changes, we might have some limited upside because of the fact that crypto bull runs typically occur, almost always occur, when there is next to no correlation between the crypto sector and the equity sector. And we have to be mindful of the fact that it might stay that way for a while here, at least until the US and perhaps the global economy start to stabilize. There's less inflation fears, less concerns that we are going to be in a long-term recession. And if we do end up in a long-term recession, and it's more concretely accepted than it is now, that could actually be decent for crypto, because then we're no longer in this speculative situation where people are trading based on what they think will happen. We've talked about it before, but it's sort of a situation where it's sell the rumor, buy the news, and we are a lot of people are speculating that a recession is around the corner, therefore they're going to drop now. But if, reality sets in and the US just comes forward and says, yes, we are officially in a recession, doing our best to get out of it, that could actually change things. And people that are in equities can say, okay, well, stock markets probably aren't going to be good for a while. I'm going to focus solely on crypto for a while. And that can actually benefit crypto pretty significantly. It's sort of similar to Black Thursday a little, where everybody was selling off once it became clear that this was a very serious pandemic. But within a couple months, it was accepted. People understood the protocol and what the pandemic was all about. And we suddenly were in the midst of one of the most historic bull runs we've ever seen, all the way up to November 2021, where things got a little above 68K for Bitcoin, and the rest was history. So buy the rumor, sell the news. Sometimes it can be sell the rumor, buy the news. But if you see these extreme sell-offs that are basically speculative, with the assumption that markets are going to get worse, then when the reality sets in and we can accept that markets are just not great because the economy is not great, that's when things can actually turn around, because the weak hands are all jumping out and saying, I'm not going to participate. And then we have less liquidity, or I should put it this way, more ability for a small amount of buys to make a dramatic difference in price without much resistance. So I focused on that in the article. We can see the CPI and inflation spikes that have occurred pretty much, I think it's something like every 30 to 35 days. It's pretty consistent on this chart, clearly. And in most cases, it stayed pretty true to form. If the CPI report is positive, we see a little bit of a rise. If the CPI report is negative, we see a drop, like we saw in May and June especially. Some big drops occurred. I remember the July one was kind of an encouraging one, because it had at least not gotten any worse, and it was reacted to appropriately. Both the S&P and crypto were able to climb a little bit. There was no CPI report in August, I believe, but there was still some discussion about the September one. And then the September one did occur, and it was a very, very bad report, worse than many expected, with 8.5% inflation announced in the US. So that very clearly brought down Bitcoin, Ethereum, and the rest of crypto with it, at least for now. All right. The other thing I wanted to mention is whales. So many of you wanted an update on this one. Here it is. Bitcoin's 100 to 10K holders are still going down. In fact, this was the lowest it's been since I made a note of it. I believe it was April 2020. So we're talking about 2.5 years now. This was a month after Black Thursday that I just mentioned. These whales are holding right now the lowest since that time. So there is not a lot of faith from those key stakeholders that really have a lot of ability to push prices up and down at any given moment. On the other hand, we do see some good signs coming from Tether right now, the top stablecoin in the world. And yes, it had plenty of drama earlier this year. It got depegged for a short period of time, went down to 95 cents before quickly recovering. And right now, the holders of $100,000 to $10 million in USDT, that's essentially the sharks and the whales, they're back up to 28.5%. But this is still a very far cry from about 4.5, 5 months ago, where they were holding about 35%. So there's some room to improve, but it's at least going the right direction. Now, typically when we see the yellow line going down and pink line moving up, it's kind of a wash and anything can happen. If both are going down together, yeah, that's really not good at all. If both are going up together, that's a very good sign. So in general, I put a little more credence on the gold line than the pink based on some back tests, but it certainly doesn't mean that the USDT line should be overlooked. They both have their value. And right now there is some accumulation and extra buying power going into stable coins from these sharks and whales. But the Bitcoin whales are really, really dumping hard right now, really ever since October. It's about 11 months now of pretty much a downward trend line like this. Moving on, we already mentioned Ethereum being bullish. To give you a quick update on Bitcoin, yeah, it's not looking so great. And yeah, a lot of that is due to so much focus being on Ethereum and other altcoins. You know, a lot of people trying to ride up pumps right now. And Bitcoin kind of has been the quote unquote boring asset out there, which causes it to not get as much attention as it probably should as the #1 market cap asset in crypto. And we can show just how much the interest for Bitcoin has dropped off by looking at its social dominance here. So the social dominance, we typically like to see 20% or above as the appropriate amount of interest line, if that makes sense. So when things are looking like this and there's a lot of discussion about Bitcoin, what do you know? This is right around the bottom and things were able to grow. As soon as it went back down below 20%, what do you know? We kind of hit a top. We tried to get back to that top, hit right around that same spot, and then dropped off. But with Bitcoin only being talked about at a 16% rate, and the way it's measured is 16% of discussions related to the top 100 assets. So not every topic in crypto. This is specifically Bitcoin versus the other 99 in that top 100. It's sitting at about 16.3%, where 20% is considered healthy. You can see another very good demonstration of how this line helps by looking at this area in October, where prices absolutely skyrocketed. And you could tell a top maybe was approaching here because by the final week of October, about 2 weeks, 1 week before the all-time high, everyone was starting to talk about meme coins, S coins, and assets that really are not as productive in growing the crypto as Bitcoin, Ethereum, and others. So that's just a little update on Bitcoin. As far as any other topics in the article, okay, yeah, so interestingly, sentiment is quite down for a lot of assets right now. Now, remember that weighted sentiment is calculated by not just the amount of discussion related to it, but also the ratio between positive and negative comments that our algorithm scrapes from data platforms like Discord, Reddit, Telegram, and Twitter, among others. And it gives us a reading on just how positive versus negative the crowd is at any given time. Combine with the amount of discussions happening, you can see very clearly behind this little bubble here, everybody was positive toward Bitcoin, Binance Coin, Hex, and Litecoin. I just have Hex in here because it's one of the most negative right now. But this was essentially how it was the vast majority of top 100 assets, because we were in a clear bubble and there was a ton of FOMO and new entries coming into the space after hearing just how much percentage gains they could have had for the past year and a half at that time. And that's where the top formed, because there was a ton of euphoria. Things dropped off a cliff, started to get negative right here. You can see pretty much all 4 of these coins are in negative territory. And then boom, we get a bottom. And same here, after a brief time in positive territory, we then get news about the Russia-Ukraine conflict. Omicron was a big deal at this time. And we were just seeing a ton of doubt related to crypto assets. And boom, prices rise as everyone is doubting it. Then we start to see a little bit of euphoria here. Prices are going down. This is kind of split. You see some negativity, some positivity. So anything can happen here. Really bad CPI reports, big split. And now we're back in pretty much unanimous negativity, especially for these 4 assets, which are highlighted. While we see such negativity, whether it's because all the attention is on Ethereum right now and these are being ignored, or because people just don't believe in these assets, it's generally a good sign. It means, based on history, there is a better chance of an upcoming bounce, and especially if Bitcoin's included in that, which it is. This is Bitcoin, by the way. So we see Litecoin, both Hex and Binance Coin right here. And then Bitcoin is at one of its most negative points in the last couple of years right now. That's a pretty good sign, actually, because there's so much FUD and impatience going on with Bitcoin continuing to bleed. It's back below 20K now. What does that mean? It's a big psychological barrier that was broken, and that often causes people that were positive just because it was over the 20K mark to now be negative because it's below the 20K mark. So keep that in mind. This is probably one of the more bullish signals that we're seeing right now, weighted sentiment being as negative as it is. And finally, I mentioned the fact that there are very few discussions happening. You can see there was a big drop-off in late August after prices did not seem to show any signs of improving. Discussion rates are easily at a 1-year low right now. Yes, we saw a very, very short rise, but you can look at where we are now compared to mid-August and before. April was a good time when a lot of people were anticipating a bounce. That, of course, didn't happen. And you can see that just gradually, if I drew a line right here, it's just been a decline for almost a year now in terms of overall discussions in crypto. We already discussed what that meant, so I won't dwell on that point. And let's go and look at a few other Bitcoin metrics now altogether. And we might hit on a few more Ethereum ones as well. So circulation, as we mentioned, it's going down. Bearish signal for Bitcoin, bullish for Ethereum, which is pretty rare to see them that far apart, but that is what's going on right now. Daily active addresses, a little bit of a rise, but nothing really special. We can consider it pretty neutral at the moment. MVRV, just like Ethereum, it's about halfway to its opportunity zone right now, where we typically see a very clear sign of a bounce. Remember that it doesn't necessarily have to go all the way to this line before we see a bounce. The further below 0% here it is, this line here, the more chance there is of a bounce. So in extreme cases, we almost certainly get bounces, but we also see plenty of moments where we get halfway down and then there's at least a mini bounce. So on average, better time than usual to be in Bitcoin according to the 30-day MVRV. And then the 365-day MVRV is pretty much right around the same spot as Ethereum. The average trader over the past year is down 38.6% on their return. That is a lot, folks. We can zoom out to look at the historical moments. Let's do 2017, and we'll full screen it. And yeah, like we got to a very, very low point here in June and early July. But really the only time that it's been below where it is now, very close. It's pretty much right at that spot at Black Thursday. And we remember what happened beginning on Black Thursday. It was pretty much the best historical time in the history of Bitcoin. I guess I can't say that, but in terms of at least the last 5 years, this was pretty much the best time to get into Bitcoin. And then going back further, we can see that the 365-day MVRV got below negative 50% in December 2018. And those who bought in right around here ended up doing pretty well. So we're still in that territory of historical lows. And again, this is one of the best signs, besides the negative weighted sentiment, that we have. Moving on, age consume, nothing special here. Unlike Ethereum, not a lot of dormant coins that are moving as of late. Supply and exchanges, let me zoom in again. So we did see a pretty big inflow, and it was just tweeted about a couple hours ago. I'll show it really quick here. So between the 7th and 14th, the week that just ended, we saw the largest inflow of Bitcoin moving to exchanges in about 11 months. The last time was October 2021, right before the November all-time high. What does it mean? Well, historically, it's a bit of a concern because coins typically move from cold wallets to exchanges for one reason, and it's not to buy more, it's to sell those coins that are moving to exchanges. So we have to be a little weary of the fact that so many coins have moved, but we also have to look at it a little more objectively. We can see the supply and exchanges has moved up just slightly. It's at 9.1%, which is still far down from where it was a year ago. That's a good sign. But if we click off of that, we're going to add the inflow, put it there, and we're also going to add the exchange flow balance, add it to the same chart, just double click there. We're going to put them both on weekly time frames, so it's not quite so granular. And what do we see? Go to the last year. Make sure it's on filled area. That typically makes it much easier to see. Okay, so exchange flow balance. The past week, we do see that it was a pretty big inflow spike, right? This confirms that it had been 11 months. However, there was also a lot of outflow. So it's not quite as scary as it looks because it just meant that there was a ton of coins moving both onto exchanges and off exchanges. And this yellow bar here, that's the net result, the difference between inflow and outflow. And this still was a pretty historic spike here. And it was the biggest since early May, just as very negative CPI reports were coming out. The S&P 500 was absolutely plummeting here in early May. So a lot of Bitcoin was moved to exchanges. Now we saw something similar, and we did have a correction that coincided with it, around 10% or so. But is that, is that the end of it is the question. And for that, we can really look at things like whales, which are not really looking any better. I already mentioned exchange flow balance. That's what we were just looking at. Network realized profit loss was negative. We already talked about how MVRV was negative as well. These are two good signs. So there's a lot of people that are selling off their coins while at a loss. That is what you want to see if you're a patient hodler or an opportunist who is buying while others are bleeding. Blood in the streets, as many famous investors have referred to these conditions as, being one of the better times to buy. Development activity for Bitcoin, nothing special to say there. We already mentioned how this isn't a great sign. We need to see a little more focus on Bitcoin, which hopefully may happen now that the merge is at least executed. I would imagine there's going to still be a lot of talk about Ethereum and Ethereum proof of work for the next week or two. But eventually, I would imagine that the social dominance starts to go above 20% again. And when it does, it's historically going to be a much more opportune time to buy than it is right at this moment when Bitcoin is still being largely ignored. We mentioned weighted sentiment being very low right now. That's obviously been the trend pretty much since the start of 2022. I'll get to this in just a moment. Ratio of daily on-chain transaction volume to profit loss. Whale transaction count, nothing special happening here. Now, quick detour. We have a Sandsheets model. I need to switch it, pardon me. And we saw a few big spikes. These are potentially altcoins we can look at depending on the recommendations, but OMG Network, Golem, interestingly, Dent, Convex, Bancor, it's going to refresh a little bit. But those are a few assets that are seeing very high whale transaction amounts at the moment, and there's something to keep an eye on. But Bitcoin, nothing really too special there. Mean dollar vested age, unlike Ethereum, not really any blips. It's continuing to just move up, which is not great. Dormant coins are continuing to sit in their addresses and essentially get cobwebs from lack of movement. We don't want to see cobwebs. And then I mentioned the ratio of profit to loss. And it's very interesting. So this is week by week. Over the past week, full screen that. Make it extra full screen so we can see. Over the past week, Ethereum was seeing a lot of profit taking. So there were transactions being made while the address that was making that transaction was in profit. And what this is measuring is the ratio between every one of those transactions and whether the address was in profit or in loss. So the higher the bar, that's indicative of a very high amount of profit transactions compared to loss transactions. When it goes into negative, that's more indicative of a bottom. So high marks equal top, bottom marks equal bottom. It's not a perfect science, but you can see pretty clearly at the conclusion of weeks, that's when you typically start to see bounces. At the conclusion of these high ones here, it's when you typically see the drops. This one worked out as expected, where Bitcoin and Ethereum were both seeing, Bitcoin a decent amount, Ethereum a pretty large amount of profit taking, and then it dropped. But look at just the first 24 to 36 hours of this week as it's starting to develop. Ethereum is seeing a historic ratio of lost transactions going on right now. And that, my friends, is a very good short-term sign, at least until this ratio starts to get close to even again, where I imagine it would. This is a small sample size, but it's also a ratio, so it means something. This isn't just a sum of a number where it might show like a huge skew at the beginning of the week. Anything that's a percentage measuring the limited amount of one thing to the limited amount of another, that's accurate. That's good information to help give you some idea of where markets are going next. And right now, we're seeing just massive capitulation ratios for Ethereum. And even Bitcoin here in blue, this is the largest loss ratio we've seen since looks like June 9th to the 14th or so, 8th to the 14th. And that was essentially where a bottom finally hit as well. So keep that in mind. I think it's one of the better metrics on Santiment, and I highly recommend looking into this one more because it can give you some very valuable info. Yeah, I think this is a good time for us to take a few questions. I will be right back. I'm just going to grab water. And Baresh, if you can collect a few, that would be great. All right, I'm back. And one other thing before we get into the assets, I wanted to point out the results of the recent polls we put out. We put out a poll today, and it was a pretty generous poll because we gave 5 years for people to decide whether Ethereum will make a new all-time high, and pretty much exactly 2/3 of the audience decided that yes, a new all-time high will be broken regardless of how they feel about the merge in that time. Now, it would have been much more interesting if we had said 1 or 2 years, and in hindsight, I think that's what the time frame should have been. But either way, it shows that there is some optimism that Ethereum is going to be fine in the long run. So that's interesting to see. And then we posted another one a couple days ago. And this one's quite interesting. So at the time, prices were at about 1620 or so. This was about, I think, 2 to 4 hours before the merge happened. And at the time, prices were actually moving up. And just over half, it's almost exactly half, but just over half of people felt that prices would drop below 1300 before it ever visits above 2000 again. And so far, the people who predicted that are looking a lot closer to being correct than the latter. But we are trying to increase the amount of polls we put up here because obviously as a sentiment related brand, we value the poll results of questions like these quite a bit because we think that they are indicative of what the crowd is thinking overall. And when we see an extreme, which we have on these kind of questions before, usually the opposite comes true because markets tend to fluctuate toward the path of least expectation from the crowd. So we'll put up another one probably in a week. It may be for like Bitcoin instead or another trending asset. Chainlink, for example, is doing well. That's one of the coins I wanted to recommend we look into. And then we'll see exactly how skewed the audience is. And then when we show it on next week's stream, we'll say, you know, the audience feels very skewed toward things going up or going down. Therefore, we think the opposite is likely to be the outcome. So I find this kind of stuff very interesting. And if you ever have poll requests for us, by all means, shoot us a message, you know, tag at Brian on the general channel, and I'll see it and I'll most likely put it up, assuming it's a legit question that a lot of people will have an opinion on. All right, so Balresh, have we gotten any decent requests here that we might be able to look into?
Yeah, Danny requested if we could take a look at the ratio of daily active addresses and daily active deposits. I think you have done that in the past and it was very interesting.
Sure, yeah, I haven't done that in a while. For which asset, sorry? I presume Ethereum?
Yeah, for Ethereum.
Okay. So this is a good quick lesson on how we make combo metrics, which is what this is. What we do is we're going to click once on daily active addresses. We're not going to click on this chart yet. We're instead going to do active deposits. And then we're going to click there. And just for good measure, we're going to add active withdrawals as well. We don't necessarily have to include it, but I want it to be an option. So I'm going to now go down to the bottom left here. You can see all three are highlighted. I'm going to click combine, and you see all three of them pop up. So now I've got the option to add, multiply, divide, however I want to combine these metrics, I can do so. You don't have to be a genius coder or Excel whiz or anything to put this together. It's quite intuitive. Let's start off by looking at how many active deposits are making up the total amount of active addresses. So in order to do that, we're going to say active deposits is x2. And we'll also just say, we'll call it deposits out of all address activity. Then as far as the math goes, it should be pretty simple. We're going to go x2, which is active deposits, divided by x1. And let's see how this all looks together. I hit combine. I'm going to click once, and then I'm going to zoom in on the chart. And we see something very interesting here. We see that the amount of active deposits that made up all of the address activity has plummeted substantially, and prices have kind of followed that. Now we need to zoom in, or zoom out, excuse me, to see a little more validation on whether this kind of measurement has some alpha. And I would say no. I would say that this is kind of a wacky, strange way of crunching the numbers here, because it just seems to go down over time more and more. So we would need to think of a better way to do the math here. Let's try again. So I'm going to click on this little metric I just made here, click on the expression, and it'll pop right back up. I think we might want to, instead of using daily active addresses, look directly at the deposits versus the withdrawals, and that might give us a better idea. So let's try deposits divided by withdrawals. Yeah, let's give that a try. We'll just call it deposits divided by withdrawals, and we'll see how it pops up. No, not really much better. Now, maybe on the short term, because we're looking so long term, things have kind of skewed over time. Now, let's see here. Anytime there is a spike in the deposits versus withdrawals, what happens? We tend to see it a lot at bottoms. That makes sense. A lot more people depositing versus withdrawing after a big drop happens. This one kind of marked a bottom. This one arguably was a bottom. And then this one, our latest, is occurring on a big downswing as well. So if we take this at its face, we would call this spike kind of a good thing, because it's showing that the amount of deposits versus withdrawals is growing. And typically when we see these spikes, it's occurring right before a bottom happens. Not all the time. If it was 100% accurate, this would be all we'd ever have to use. But we can see that this last time, this was a bottom. This, I mean, you know, on second thought, as I look at it, I think it's kind of irrelevant, because it popped very subtly and then fell down further. But this is a legit spike right before a rise. This one was before a mini rise. And if we go, let's go like back, let's like look at this section here, right here. So obviously the huge spike happened in May of 2022, right at the bottom. This was about a week after some really, really negative inflation news came in, and stock markets crashed and crypto crashed along with it. But then all of a sudden we see a bunch of deposits compared to withdrawals, and prices were able to pop a bit. I would say, you know, maybe if we started to look at it more on like a weekly scale, it could give a little more. I don't want to take up too much time trying to do some data science live on the call, but we can see that there's some interesting developments here, especially considering this past week, the week that started. So far between deposit and withdrawals is at its highest point in 2022, going back to early December, the last time we saw anything this crazy. So I think that's a really cool suggestion, whoever asked for that in the chat. And at the very least, I was able to kind of show you guys how to make combo metrics and do all sorts of fun things. You know, another thing we can do that I do often on analysis is I do funding rate combinations. So I might say, all right, I want to look at the 1 hour funding rate fluctuations. FYI, Binance and BitMEX are only 8 hour funding rate updates. So we can do DYDX plus FTX, combine them. You can see how they're together. We'll just say 1 hour funding rate. I want to put these in parentheses because we're doing an average, and then just divide by 2. And this is our average funding rate for Ethereum. And you can see that same huge drop that we were talking about earlier, which was just pretty jaw-dropping, largest in about 2.5 years. And it's interesting, I want to zoom in and see if that's actually gone into the positive. Yeah, it has. So just during the call, it looks like over the last hour, it started to go back in the positive range. So that's worth checking out. Maybe people are starting to play the buy the dip game a little bit, assuming that some of the chaos is starting to settle down now. But yeah, I hope that answers your question. And if you would like to see that the deposits versus daily active addresses or withdrawals a different way, let me know, and I could probably do a quick final combo metric for you. I want to make sure to answer your question. But in the meantime, if there are other requests on metrics or assets, let me know what you're seeing, Balaresh.
We have 2 open asset requests. The first is FTT, so that should be the FTX token. And
sure.
The other one is ADA, Cardano.
Okay. Yeah, let's do FTT first. Let's go back to our main template here, which, by the way, I don't know if I made it private yet, so I'm going to do that right now. Share. Main template to analyze all of the primary this week in crypto metrics we look at every Friday. And we'll also have that link public so you can load it up directly on Sandbase going forward. Okie dokie. So heading back to FTT, let's see what we got here. So beginning with circulation, we see some pretty major spikes that occur it looks like every couple of weeks. Let me zoom out a little to the last year. Yeah, so FTT seems, it's sort of like BNB and KuCoin's native token. A few other big exchange tokens tend to have this type of phenomenon where they're either pretty dormant or they just have a huge spike in circulation. Oftentimes, it doesn't really have a serious impact on the price, but you can see like around here, right around the bottom, there was just a huge influx of FTT circulation. So that's interesting. As of now, though, nothing really special going on with the circulation for FTT. We had one massive daily active address spike here for FTT. It doesn't look like there's anything special going on since, though. MVRV, let's take a look at that. So for the 30-day, we can see that the average traders are down a little over -9%. That is a good sign. It's indicative of traders being in pretty decent pain, meaning there's an opportunity to have a bounce. Remember that the -15% line is going to be, it's kind of weird that the axis doesn't show, but it's about right there. So generally, when we see it go below, as we did there, that's where the bounces occur. As for the 365-day MVRV, it's in a not as negative of a spot as Bitcoin and Ethereum, interestingly. So if you're looking to hedge altcoins versus Bitcoin and Ethereum, there are probably better long-term opportunities considering FTT traders are not in as much pain as most. Heading on down, no funding rate data for now. Whale transactions, let's see if there's anything going on there. Not really. 100K whales, nothing special. 1 million or above whale transactions, pretty non-existent. Let's take a look at whales and see what's going on there. So FTT is currently priced at about $24. I would say that whales would then start. Let's take a look at 1,000, 10,000, 100,000. I'm going to combine all three of those. Hit confirm. Remove that. We need price. So I'm just going to add that straight to the chart right here. Switch that over to bars so it's a little easier to see. And there we go. So if we look at the past year for FTT whales, we see that they've done a pretty good job of predicting price. They really started to sell off right around the, I presume, close to the all-time high. I can see just a larger number right here, but it was close to an all-time high. Right here, around the same time Bitcoin was topping out at its own all-time high, they were selling off right at that top and didn't start accumulating until right here. And when they did, if I hold down Shift and I drag it all the way to when they hit their top, you can see the red line got to the top right, about there, 36, anywhere between 28 and 36% return, which is pretty darn good. They also got this right because they sold at the top there, and that was their bottom when the price went down about 42.5%. So whales seem to have pretty nice alpha here. Let's go further. Let's hold down Shift all the way from this top here to their bottom. Prices went down about 49%. And then from this bottom to where we are now, where they've accumulated, looks like a modest 3.6% more coins, these whales. And prices are pretty flat at about -3%. So this is kind of wait and see time, but it does look like there is at least a mild propensity to accumulate right now. Over the past 10 days, they have dumped a tiny bit, but still, if we go back to late June up until mid-September, it's a better sign than not because they're moving more coins into their wallets of the overall supply. And for the sake of time, I think we'll wrap that up for FTT. I'm not seeing anything else too notable. Weighted sentiment showing there isn't really much discussion about FTT at the moment. So let's move on to Cardano here, and then we're going to wrap up. So Cardano's circulation is continuing to fall. It's been one of the more underwhelming, disappointing coins of 2022, as most coins have been. But even during some of the short-term bounces, Cardano has not really had any moments in the sun where the asset started to break away and have its big surge of its own, like so many other coins have. So circulation is down, daily active address is down still. We talked about MVRV. We'll just keep it simple and look at the 365-day for convenience. And it is one of the more in-pain tokens out there, especially amongst the top 30 or so. The average 365-day trader is down -48%, which is a ton. We talked about how I think it was Bitcoin, it got below -50% back in 2018 before having a pretty nice rally. Well, Cardano is right around there. And you can see a couple other moments in the year. It got to -58% or so. It got to -61 there. So yeah, we're approaching the times in which Cardano kind of bottoms out, which is a good sign. Just remember, this is a long-term metric. So it doesn't mean that by next week it's going to be up again. It can stay down in negative range for a while, but at least the potential of further downside is starting to evaporate. There isn't much more downside that can happen while there's already this much trader pain. Not investment advice by any means. Just remember that based on historical expectations, this is a good sign where we are now with so much pain already have happened. Funding rates, let's zoom in a little bit for this. Doesn't look like there's any crazy shorting or longing. It's right about at even. Whale transactions, not much happening. We do see kind of an uptick. Yeah, we had some big whale transactions going on. 37 transactions that were valued at over $1 million. That's interesting to see. You can see that the last time there were a bunch of big spikes over a 3-day span. This was right before a big drop, but that was mostly a market-wide drop anyways. So I wouldn't take too much credence, and it doesn't appear that there are too many huge spikes going on here. Whales for Cardano are interesting. It's not something that I've seen some major alpha for, but we can try anyways and see if there's anything new happening. So it's priced at around 46 cents now. We will go ahead and place the whales at, let's get rid of that, by the way. So 100,000 to 10 million or so sounds about right. Go to the last year, full screen that. And yeah, I mean, this is probably the best tier to watch because they did top out and started dumping all the way down to right around here, mid-June. And since they started accumulating, the bleeding has mostly stopped. The price is only down -4%. That's kind of a win for a lot of assets over that span because so many have been bleeding a lot more than that. But for now, it does look like the trend is still, mostly dumping. It's not looking too exciting for Cardano holders, and I'm not seeing anything super encouraging that's going to imply a big turnaround is around the corner. Yeah, I mean, there's been pretty much a constant dump since March.
I'm sorry, we have lost Brian, it seems. Let's give him a second. Okay, it looks like Brian is not coming back. So in his name and from the whole team, thank you very much for tuning in, and we'll see you next week.